Perfect. Great. So here we are. I went ahead and I logged in right before our webinar here so everybody could see an example of what our dashboard looks like. You know, I know we have some that have just joined us, and then some that have been with us for a while, and some that aren't quite iVolatility users yet. So this webinar is designed for, you know, all three. If you're not currently an iVol user, all you need to do at the end of this webinar is shoot us a note at support@ivolatility.com, and we'll get you all squared away. So here we are here in our dashboard. Again, in our other webinar sessions, I kind of go through the layout and how to use all these different tools. Just know that on the left sidebar, you can access things like, you know, the getting started guide, which is great, you know, because this is recently updated. It has all the key tools you need to get the most out of your iVol Live subscription, as well as our key videos and our top tools like sentiment analyzer, P&L calculator, real-time spread scanner, which we'll be spending our time on today, and data now. So those are all just shortcuts to get to where you need to be, you know, for those specific tools, as well as, you know, different glossaries and how-to guides, and you can follow us on our social there. And then, of course, our knowledge base, which is very useful. So definitely check out the Getting Started page. Again, these are the different tools that I go through every Tuesday. We do a different topic. Today will be real-time spread scanner. What I want to do, though, is I want to show how it all ties together. So iVolatility and, you know, how to use these tools. Because ultimately what iVolatility is it's a giant, powerful analytical tool to help you identify actionable options trades. So the whole idea is, you know, using this platform to find trades that you can make with your live, you know, options trading. So to show how everything kind of plays together, you know, how we go from one to the other, I want to show under here, news and research. This is where, you know, over here, latest news, this is where we give you, you know, a couple sentences on what's going on in the market today. News and research is our editorial. This is what we put out using iVol Live tools, right? So we're constantly scanning the market for implied volatility. We're looking at anomalies. You know, here we kind of like to recap the prior week. We talk about strong names, which is, you know, Tesla and Salesforce last week. And we also talk about names that have some kind of impending catalyst. And something with an impending catalyst can be perfect for the real-time spread scanner. And in this case, we have Dish Network. So Dish has been showing up on our screens for the past few months with an uptick in implied volatility. And the reason why now that there's been such a surge in implied volatility is because Dish has this mandate to get to roughly percent coverage of the US with its 5G by the end of the month. And so what's great about this for potential spread um, potential spread trade is that there's a set, right, which is the end of this month. So with that, we can find interesting options trades to manage this. Is if Dish hits this mandate, its shares will go higher. If it misses its mandate, its shares will go lower. So it sets up this very interesting if-then statement that we focus working webinar. But you see, we also go through all sorts of interesting here. The relationship between and volatility. Came up on our last webinar is, you know, does that inverse relationship still exist? And as you can see, it definitely does. As the spot price goes higher, it goes lower. So, you know, and then the pieces say, okay, how do you use it to make money? And so we cover that. So with that being said, you can go back and measure what I want to focus on again today for our webinar. A name further. Well, all you need to do is click on over to real-time spread scanner. This is another Hey guys, does that sound better? Can somebody confirm in the chat? I got a note that the sound was a little off, making sure the sound's a whole lot better. Okay, great. Okay, so I had to reset the sound here. And now let me pull that up. Eyeball Live. Okay, perfect. So sound, and then everybody can see the screen as well, right? Perfect. Alrighty. So now when we come to the real-time spread scanner, here's what the default screen will look like. You'll have your right, so to begin, we always have the PDF of our particular guide. So in this case, the real-time spread scanner guide is in the upper left. So you can see that here. So anytime you have a question on any of these tools, you're always able to pull up the guide. We have a table of contents. You can always do Control F if you need to look for a specific parameter. So just wanted to point that out to everybody. And then as we go down here, the way to read this again, of any of our tools, is from left to right. So what I want to demonstrate today is a few different strategies using dish as our example. We have the straddle, the strangle, the gut strangle that I'm going to show today, as well as the naked call, naked put, covered call, as well as covered call. So that's 6, high octane strategies that we can use using dish as our example. So the reason why I think dish makes an interesting straddle trade, so I'll show you how to set this up and then explain, the logic behind, setting up the straddle. So when we run the real-time spread scanner, we're able to run it against our stock universe, which is, these are any of our default universes you can run this against. So if you love trading straddles or calendar spreads or bull diagonal spreads, whatever it is that you like trading, you're able to set that up. Mute a couple here, little background noise. You're able to set that up, and run that scan against a universe of our defaults, which is everything we cover here. You're also able to run that against custom groups. So you can, create some custom groups and run those scans. Or you can do a specific stock, right? So in our case, we want to do dish. And I'll cover dish a bit more here. I just want to show you guys how to set up an initial scan. And then once you have your stock selected, you could decide to do stock sentiment, bullish, neutral, bearish, or any. You could also have volatile behavior, quiet behavior. So if you were running this screen against some of these preset indices like the Dow or the S&P, you could then toggle between the sentiment or the behavior, the implied volatility index. It could be cheap, normal, or deer. Deer would be a high implied volatility, which has been the story of Dish. And then you can have that relative to its 1-year range, percent compared to historical volatility, or in terms of absolute terms. So for right now, I want to keep it super, super simple. We're going to run the screen against Dish. The strategy here. So this is a good point. This is why I have multiple tabs going when I'm working in my Eyeball Live session, because what I like to do kind of before I run this scan, just real quick, I like to pull up the name in Eyeball Live. So when I come to Eyeball Live, when I pull up Dish Network, what I'll see here is the fundamentals on the left. I'll see the options chain as soon as it loads. And then I'll see the chart over here on the right. And some of the things that are interesting about, Dish, for an example, when you come over here to the fundamentals, anytime you want to add something to your view, just look for the gear icon. I covered this a lot in our webinar last week, but so I won't go too deep into it, but you can pull different things and different criteria. And one of the things I was looking for was this IVP. What IVP means is this is saying, okay, what percentage of the time has Dish been trading with this implied volatility level of 98.4 over the past 12 months? And you can see 87.2% of the time, Dish has been trading lower than its current implied volatility level, which is telling us we're at a significant moment in Dish's history, right? In its trading history. And that is what got our attention 2 months ago, even prior to this news, hitting the market. What I like to do before running the scan is I just like to quickly analyze the chart. So on the chart, what you have, we got this question prior to the webinar, how far back does the data go? You get 5 years worth of data standard, with IVOL Live subscription. And what you get is blue, implied volatility in green, and then you get historical volatility in orange. And so what I want to point out here is the interesting relationship between the implied volatility and price. So we can see that price has gone lower for Dish and implied volatility and historical volatility higher. So this is the relationship that's been playing out for Dish over the this chart. Let's zoom in. On 1 year, you can see it's the same. And what's great about this view as well, you're able to draw things, and draw attention to is you're interested in. So for me, I'm very interested in this relationship, and this between price and implied vol, this gap that's been growing. So we know there's going to be a move one way or another, and Dish is either going to continue lower or it's going to reverse this and it's going to go higher. So another thing you can do from this view is you can draw the trend line here. You can see the downtrend on Dish. And what's great about this, I showed again in last week, is you could take a snapshot, add it to your trading journal, you can save it. You can see I have all kind of different chart layouts. So last week we covered charts. I'm not really going to go into detail on that, but just know when I read that news and we wrote that in the editorial piece, I pulled up this chart. This is the first thing I did before I ran any real-time spread scans on Dish. I pulled up this chart and I saw clearly something's going to happen. Either Dish is going to continue lower or it's going to break out of the downtrend. And what you'll see is you'll see implied volatility and price kiss. And when that happens, Dish can change trend and move higher. So this is just a good example of how, I'll see a news item, I'll pull up the chart, I'll say, oh, that looks interesting. Now let me design an options trade around that. So speaking of designing the options trade, let's start off super basic. So we have our Dish stock here, our strategy. Let's say that we wanted to predict that would continue lower. So we want to go long a naked put. This means we're buying a put, and we're gonna bet that Dish continues its down. So here we set up our strategy. We're going long the naked put on the stock Dish. Options. So here again, as you get a few more people jumping in here, as you get more familiar with the system, you can set the moneyness as any, out of the money, at the money, in the money. I personally am an at the money trader. Like I like trading stocks that are in options that are near or at the money. So that I've selected ATM. Over here on risk reward, again, as you get more advanced with the system, you could say, hey, I don't want any trades that are going to cost me more than 1,000, for an example. But for now, we'll leave that blank. And same thing with Greeks. We had a couple questions. How do you set Greeks on the real-time spread scanner? This is the tab that you do that from. So if you like look at certain deltas, vegas, gammas, not going to cover that today. It's a bit more advanced, but this is the screen that you would run that and those inputs from. All I have to do now is hit search. And remember what this is doing is this is finding interesting put options that I could buy on, let me specify that we want Dish here. There we go. Hit search. Otherwise, it defaulted to SPX. So here we go. So these are different trade ideas that the system is laying out for us. And what it gives us is the specific option, right? Buy one June 3rd, $6 put on Dish. The current underlying stock price, 657. How much money is this going to cost? So each option trades in increments of 100 shares. So this would cost $19. The potential profit if the position of Dish goes lower by 2 standard deviations from the current price, this is how much we'd stand to gain. Here's our risk. Since we're buying a put option, our risk is 100% of the premium that we use to buy the option. So that means a reward, risk versus capital requirement. When you buy an option, right, anything on that premium, you could lose 100% of that, which is why you'll see when you buy an option, whether it's a put or a call, this risk versus capital required will, and then our max return. And then you could sort these however you would like, right? So you could sort the $27 put. So in this case, we'd be spending $252 to buy this. So here's a good example. Let's click on this specific option, and I can evaluate it further. I could say, okay, well, in order for this to be profitable, right? It's already in the money since it's at $7. You can expand this view so you can see the full option chain. Here are the different Greeks for the chain. What's great about this is a lot of people love our P&L calculator. I'm under the spread details, and all you have to do is click on the specific option to get here. And this is like a mini P&L, because what you're able to do here is, if you hit simulate, what this tells me is, on the horizontal axis, we have time. This is 10 days, 20 days, 30 days from now. And I can change this because, this option doesn't expire till December. So I could say, let's do 45-day increments and simulate. And what you can also do is change the underlying price, for an example. So here we say, well, what happens anytime, this changes by, let's do $2.50 increments for Dish, for the underlying share price. And this will show you, as Dish goes lower, at this is the point that we need the stock to hit for us to start earning a profit, because ultimately we're paying, $252 for this position. So this is great, because this is like a mini P&L, a quick hit P&L calc is what I like to call it, on any individual stock position or options trade that you're interested in. So what I would do then is, this put option, is interesting to me. We have till December for it to play out. But, what my point with that editorial piece was, is we know this catalyst is going to happen by the end of this month, by the end of June. So this is a great example where we could kind of tighten this up a little bit. And we could say, well, let's look at only, instead of all of this universe of put options, let's only look at short-term put options, which is between now, and our system will automatically put in a few months from now, which is 8/22/2023. Hit search, and you'll see this list has a couple more people hopping in from the waiting room. Welcome. We're diving right in here. And so also, this is going to be recorded, just a quick note. So if you did miss any of the beginning, I'll have our team, once it's done being edited, shoot this out to everybody on today's webinar. So if you missed a little bit in the beginning, no worries. So here we go. I just researched. What we're looking at is betting on the downside for Dish Network. It has a catalyst by the end of this month. And you can see these are all the short-term options. I could sort this again by risk reward. I could say, okay, this June 16th, let's go to July, because we want to let June play out. Here we go. Here's the option that looks interesting to me. We can simulate. And I know that once Dish at 522, this particular put option, 522 a share, this particular put option would be profitable. So what happens once you find an option that you're interested in? What you do is you put a little check mark by it, and then you hit copy to pocket. So your pocket is like your bullpen. This is where you're putting trades that you're interested in following up on, pursuing. You could also check and hit copy to clipboard, and then you could copy and paste that into an Excel sheet, for an example. Or you could download and same thing, put it in Excel, whatever you desire. So now when we come to pocket, you see we have, a trade that looks interesting to me, betting on the downside, very simple put option on Dish. So now let's come over here and let's change our strategy a bit. Let's say that we want to also look at the upside, right? Because what if Dish is able to hit its quota of 70% coverage on its 5G? The market likes that news, and it sends the stock higher. Same thing here. I'm running this scan against Dish. I'm leaving all of this as the defaults. I'm looking at the short-term options. I'm not messing with the risk reward. And then here, I'm going to do the same thing. I like to toggle when I'm buying a put or buying a call. I like to toggle on risk reward. Ultimately, I know I stand to lose the 100% of the premium, as this column makes clear. So I'm well aware of that, but I like to sort based on risk reward. And then I like to give the trade a little bit of time to play out. I think these June expirations are a little too tight. So I'd come here, I'd do the same thing. I'd look at this July 14th expiration. I'd click on that. That brings me to the spread details here. This gives me all the details I need on Dish, the underlying price. Here is the option chain, the buying one July 14th, $6 call for $1.49. So even before hitting simulate, I know that I need the stock to hit 650 to be break even, because it's costing me about $1.50 to get, or 750, excuse me, to break even, because it's costing me about $1.50 to enter this position. So that's before even hitting simulate. But I could come down here, hit our little quick hit P&L calculator, and there we go. Based on our y-axis over here, this underlying share price, once we hit around 782, I'm profitable on this particular trade, which makes a lot of sense. And again, you can change this however you'd like. We could do a shorter time frame, every 5 days, right? We could do, again, the $2.50 increments on dollar terms for those that just joined us. This is like a quick hit P&L calc. So our P&L calculator deserves a webinar in and of its own right, and we'll do one of these Tuesday sessions on the P&L calc soon. But for now, just know that within the real-time spread scanner, you don't need to click away. You can come here and simulate, and here we go. Like once Dish is at $9, $11, this particular call option gets very, very interesting, So I could come back here and say, all right, let's copy that to the pocket. It merits further investigation. So now let's do one more. I want to show how change the strategy here from long to short. So let's say you were mildly bullish on Dish. You said, look, Dish has fallen heavily over the last, 2 to 5 years. But I think the sell-off is done. I think it's going to stabilize. It might not go higher, but it should at least mark time, and stay about where it is today. That would make sense then to sell a put, right? So when, instead of going long a put, when you sell a put, you're going short the put, and that would be agreeing to buy Dish at a certain price, in the future. So we could do the same thing. We could say, hey, I'll agree to buy Dish in the short term by selling a put option, which means I'll get paid the premium up front. So I just want to demonstrate what that looks like, because we had the question come in before the webinar, how do you run a scan on selling to open put options? And this is how you do that. You change this from long to short, and then you put naked put in your inputs there under strategy. And here we go. So let's come to our same expiration here in July, short by risk reward. Here's our max return. You can see, so what our system calculates, this is another question that came in. Anytime you're selling to open an option, it assumes you're using margin. And so it calculates these max returns and risk rewards based on the assumption that you've got a 20% margin account. So just, that's a little side note there, but here we go. So we've sorted these. Here's my favorite little expiration is July 14th for Dish, because, we'll know by July 14th, whether or not it hits its quota or not. So I can click on this. And what this tells me, again, is the Greeks for the particular trade. And I know he per share. So that's $32 for, 100 shares. If I sell in this particular put option, this would be agreeing to buy Dish. If it's at 650 on July 14th, you could see it's at 651. So the likelihood is high, that I'd probably be put. But if I like Dish at current prices, hey, look, I'm able to actually leg into this trade for 650 minus the 32 I get paid, right? So I'm in at almost $6 instead of current prices at 651. You can come here, same thing, simulate. We could do the underlying is again, and this is where you would go to analyze the potential P&L of trade 3. Let's add this to the pocket, copy to pocket. Now let's go to our pocket, and here's 3 different simple strategies on Dish. Here, if I was going to go bearish on Dish, I'd buy the put option expiring on July 14th for $1.33. Here's what I would do is, if I was bullish, I would buy the $6 call option for $1.49. And then here's what I would do if I was mildly bullish to neutral. I would sell to open this put option, right? So 3 very easy basic options trade using the real-time spread scanner. So now let's ratchet this up a little bit. Let's go to back to long. Typically long is what you'll use most often with the strategies. Let's go to straddle. let's go to stocks, which we'll leave as Dish. We'll leave all of this the same and hit search. And so again, I'm looking for a short-term, just to come back here, straddles, right, on Dish. And with a straddle, what you'll have is you'll see you have the same expiration, you have the same strike price, $6 call, $6 put. And really what you use a straddle for is when you know a directional move will happen, you just don't know what direction it will go, right? So we know something's going to happen with Dish. It's going to go higher or lower. We just don't know exactly which direction it'll go, right? Which is why this particular strategy is perfect. Because what we'll be doing is we'll be buying a call, so we're set on the upside, and we're going to be buying a put, so we're set on the downside. Our risk with a straddle is that the stock does nothing. Like if Dish just stays stagnant and doesn't go, above $6 plus $1.18. So if it doesn't go above 720, we'll be unprofitable on the call. And if it doesn't go below, let's say 550 here on the put, because I could just subtract the premium, that it'll cost, then we're going to be unprofitable on the put. So what you're looking for with a straddle is you're looking for a direction move in an underlying stock. So if I come here and if I sort by risk reward, like we've been doing, some of these Junes, stand out because obviously they're shorter term. They focus on our July 14th date. So let's look at this one. Buying one July 14th, 2023, 650 call for 90 cents. So again, here we would need the stock to go to about, 750 to break even. And then here we'd be buying the 650 put for $1.05. So we would need a Dish to drop to, about 550 a share for this leg to be profitable. And so what's great is I can just click on that. And then here we go. These options will pop up. It'll show us all of our Greeks. Here I can do my simulation. And then we could say what happens for every $2.50 change in the underlying share price. And here we go. This is a perfect illustration. So this shows that, if Dish stays around its current price of $6.51 a share, we're going to be unprofitable on the trade, right? We're going to lose what we spend to buy this particular straddle, right? Which will be $1.05 plus 90 cents. So we'll spend $1.95, so $195 to enter this trade, with your broker, for an example, TD Ameritrade. So our risk is that, if it stays stagnant, we'll lose what we spent, that $1.95. However, if Dish drops to 401 or $1.51, or if it rises to 901 or 1151, here's our profit, right? We're profitable because the profit on one side of the trade is going to more than make up for the fact that we'll lose what we spent on the other leg of the trade. That's what's so powerful about a good straddle. So I like that. I actually really like that trade. So let's put that in our pocket. And now I want to continue moving along to a strangle. So a strangle is very similar to a straddle. And I know these names can be a mouthful. I know some people that have traded options for years and still kind of can't get the vocab straight because they are a bit of a mouthful. But the key difference here is this, right? We have the same expiration date. Have different strike prices, right? There's $7 on the call side, $6 on the put side. So since this is a bit out of the club is cheap, right, at 27 cents. Likewise here, it's a bit more out of the money at $6 on the put side, so it's a bit cheaper. It's only 20 cents. So what we can do is we could sort by risk reward. We can come to our favorite expiration date here, our July 14th. And even just eyeballing this, I can tell what I need to happen. But by buying this, we need the stock to rise to 750 to be break even on the call. And then we need it to drop to $7 minus $1.33. So, about $5.70 per share to be profitable on the put leg of the trade. So if I pull this up and we run our handy little P&L simulation, let's go ahead and do those $2.50 increment. If you have a higher price stock, you could do $10 increments. Like, for example, if you're looking at Tesla or, Amazon, additional 250, or I like $1.50 as my increments. Get a perfect right? We need a relatively large move to be profitable. We need this thing to go, 1153 based on what it's going to cost us to enter the. We need it to go as low as, really $2 to be profitable, based on what we're spending to get into the trade. So that's very, very valuable knowledge. And it does all that complicated math with like literally 2 clicks of a button. So let's go ahead and copy that to our pocket. Again, if you were working in Excel, you could copy that to your clipboard. I just want to show one strategy why we're here, and that's the gut strangle. So the gut strangle is very similar to the shocker, but it goes a bit deeper out of the money. So, and you can see actually there's that show for Dish for the strangle, but it's basically just like the strangle strategy that we just looked at. It's just further out of the money, right? So you need a bigger move for to pay off. And with Dish, such a low price stock at 650, those moves are not likely. Therefore, there are no results. So let's come here to our pocket. You can see these are the 1, 2, 3, 4, 5 interesting trades that I would want to make in real life. Here I can go back to them. I can further evaluate them. I can save as. So if you click as save as, this is great because now let's check this out. So if I go to a brand new iVolatility session, let's say that you get busy. Let's say that you step away from your computer, you log out, whatever. You can save your pocket, and then all we got to do is click on Open Pocket, and then we go to Downloads. Here's our pocket. There we go. So that's another question that came up is how do I save a watch list of names and potential trades? That's how you do it. You bring them into your pocket, you save your pocket, and then you just open it anytime you come back on to iVol Live. And now you can, have it here. You could select, and again, you can also dig deeper whenever you need to. And then that brings us to the monitor. Once you click on Dish, this brings you up to the monitor for Dish. So what's the monitor? Well, the monitor is very similar to our options chain view. So just real quick, here's our chart we were looking at for Dish. Let me minimize that. Just click those 4 directional arrows. So you can see with our options chain, what you'll get is, here's our price up here on the left. Here's the options chain with all the different strike price. You get the different Greeks, Delta, Vega, Theta. You can always add to those, here. Well, with the monitor view, let's go to that. You get the underlying share price and whether it's up or down for the day. You get the implied volatility reading, which we looked at the beginning of this webinar, which is high. It's 98.38. That's historically high for Dish because it's facing this issue. It's spending a ton of money to get this 5G coverage across the US, and it's, the jury's still out if it's going to be able to execute. This is going to give you all the options for this name, right? Which is Dish. Now you can say, I only want to look at puts, or I only look at calls, for example. But it's going to start off giving you all of the data, all puts, all calls. All puts, all calls, sorry, that's a mouthful, for a specific date range. So you can see this is going from essentially this Friday's expiration to December 19th, right? So this is going to the end of 2025, actually. And it's showing you strike prices that are from 50 cents to $65. So, this is a huge amount of data, right? And really probably you don't need this amount of data. So the question is, well, how do I whittle this down, to something that's actionable? And so we know our thesis is something's going to happen to Dish. It's going to go higher or it's going to go lower, and it's going to happen between now and the end of June. So all I need to do then is I could come here and remember we were looking at those expiration dates on the 14th. So I could say, okay, I only want to look at options that expire between now and July 14th. And I only want to look at those that have a strike price from 50 cents to $7, for an example. And look at that. That really brought the list of this universe of Dish Network available options much, much, much lower. And then I could say, well, let's keep this closer to the money, right? Like for all of those spread trades we looked at, we were looking at strike prices from, $5 to $7, So here we go. These are options that have on the low end here, this is $5. And then on the higher end, we go as high as $7. And again, you can whittle this down. You can say, well, I only want to look at options, that have a $7 strike price of $7. Or I only want to look at options that have a strike price of $6. And this is how you would do that. And what's great about this is, now you could find the specific option that you were interested in, right? So we were looking at going long dish at $6, the call. We were also looking at going short, buying the put on dish. So here's the put. And what I could do is I could copy that to clipboard. So if I was working in Excel, I can also save this monitor. Right. So here is all of the dish trades that I'm interested in, all the strike prices. You have the type, call put, you have the expiration. You also have the specific strike, you have the bid and the ask, you have the implied volatility for the specific strike price, and then you have the delta. So the delta showing us, how sensitive the option is to every $1 movement in dish. Right. So, you can see a high delta here at 81. So this option is going to move 81 cents for every $1 move in the underlying share price of Dish Network. So, this is really, really cool because it tells you a lot with a very quick screen. So this is one of my favorite views. And what you're able to do is, now that you've got it whittled down to, maybe 10 different options you're interested in, again, we can save this. And then if we were working and we, walked away, we grabbed a coffee, whatever, we come back to our real-time spread scanner, we go to our monitor. All we have to do is hit open monitor, and we come here, dish, uploading file. We have a few more people joining us. And there we go. The monitor has populated. So that's another way that you can go. You can do that with the monitor and with the pocket. You're able to save those and then load those anytime you enter a new session. So this is how, I would go full circle. Like, you could either take our editorial ideas, which again, if you just joined us, our editorial, we put out every Monday. And in that editorial, we give an overview of the market. We recap the prior week's action. And we also talk about interesting names that we see with our implied volatility screens that we have. And for this week, Dish showed up, and that was right here under the Monday, June 12th. We came in here. Again, we had a lot of people join kind of after we started. And within this was probably the most interesting nugget from the piece that I read on Monday. So I was like, wait a minute, Dish has been going up and up and up with its implied volatility. Here's why that's happening. And then we came over to the real-time spread scanner, and we designed trades, and we ran scans to find the best potential trades. And then we saved those. Find our session, and then we save those to our pocket in our monitor. And that's how we went from interesting nugget of information to looking at the chart on iVol Live, to finding this huge surge in implied volatility, downtrend in price. And then we came here to run the scan to find these potential trade setups. And then I'll take my favorite trade out of these, or out of the pocket. I'll take my favorite trade and I'll execute that with my online broker. And that's, again, how we go full cycle. So we are at about 45 minutes after the hour. I just want to pause to see if there's any questions. Again, this is being recorded, so we'll edit it, clean it up a bit, get out any background noise, and then send it out to everybody who registered. So if you did miss anything, you're able to, look at it at your leisure. And I do want to come here, and you can run this not just for Dish, but anything. You could do Walmart here. You could do Tesla. I would recommend finding 1 or 2 stocks that you really like, and then just get really used to using this tool by running just a very simple scan on your favorite stock. Look at buying a call, look at buying a put, and then look at doing a straddle and strangle. Those are 4 very, very kind of easy and intuitive strategies that you can use in your favorite stocks. So I'd recommend doing that. And if you have no ideas that what you want to look at, just run it against the S&P, and you'll get all kinds of, interesting results, within the S&P. And then you can dig deeper, as you see something that stands out. And then again, you can sort these columns based on risk reward, risk versus capital, 2 standard deviations, etc. Let's see, can you keep a portfolio and monitor its P&L change in delta, et cetera, each day? Yeah, so what you could do is you could have your monitor saved, again here, and then what it will do is every day you could pull up the same monitor and it will show you the difference, right? What's happening with implied volatility, day over day, what's happening with will automatically update the changes in and so that is a good question too. I'm using a pro real time. So different account types at Ivo Live. We have pro real time, which is what I use, and it updates as the markets open in real time. We have advanced, which is 20-minute delay data, and then we have basic. But to get access to the real time spread scanner, you need the pro real time account. So if you're not currently an Ivo Live user, again, shoot us a note, support@ivolatility.com. And let me put that in the chat. And we'll get you all set up. Yeah, now it only monitors implied volatility prices in delta. It doesn't measure the differences day over day in gamma or convexity. That's a good idea. I think maybe as we enhance this monitor feature, we can add additional Greeks, right? So vega, theta, gamma. I think that's a good idea. So I'll pass that on to our developers. And again, all of that information is also available to you under the iLive here into the options view. You're able to add any of those Greeks to the options chain view. You can use those and apply those to anything that we cover. And we cover all US stock TFs, European stocks, Canadian stocks, Asian stocks, Indian stocks. So we have quite a bit of coverage, and then you can again decide exactly which Greeks you want to see here. Let me just show that real quick. So you click on this column settings, and you can look for it. So let's say you wanted row for an example, you can add it. Theta is another popular one. Here we go, and then gamma. Here we go. And then you can apply, and it will, go for this one name. So for an example, dish, which is my tab here, or you can do save as default, and that will apply across any tab that you pull up in the future. So now you can see we have rho, vega, theta, gamma, delta, and it will measure this for all available options for all available stocks that we cover, which again is a huge universe, Hey there, Gates. Yep, I saw your note. I'll jot that down, and I'll have our team shoot you an email afterwards so we can schedule some time to connect and discuss further. Yeah, we'd love to. So I'll reach out after this webinar, Gates. All right, great. Well, I'm also joined by our founder, Mr. Genna, who is invaluable in the chat. As I kind of get in my groove here talking, he helps answer a lot of these questions that show up in the chat. And the question we had is, can we graph the analysis? And as Genna mentioned, we're looking to develop a portfolio service. So that way you could upload your positions and then you can monitor them. You can graph them. You can look at them in table format or graph format, and you can see what's going on with that portfolio. You can look at the Greeks. You can look at the implied volatility. It'll be a really, really cool service where you can just upload your portfolio. For now, what we have is if you go to the stock monitor here, let's say you're running a screen and you want to create a new group. One of the things you could do today, we focused on Dish, but you could do real-time spread scanner, 6, 13, 23 ideas, right? And then that's going to create this new group. And so what you're able to do then is you could then run a screen against, these are all my custom groups, and you can see I use Ivo Live all the time. So I have a ton of custom groups, but you could run this against the Dow Jones, for an example, and this is just running a basic screen. It's looking at last price, change, IVX, IVP. This is just a custom screener that I created. And as I find things I'm interested in, I could just put a little check mark here. So this is one of our newer features. And then all I have to do is click this plus icon and then add to the group. So I could add to, I just clicked on that, but I would add to the real-time spread scanner group that we just set up. The other thing you could do is come here and then add to group from a file. So if you had a list of stocks that you like to follow, as long as it's in CSV format, all you have to do is click open file, and then you just select the group, that you want to add it to, right? So we would do this real-time spread scanner, and then you would hit add, and then it would automatically populate into that new group. So those are some new cool features that we added in the interim. And then, as soon as we have that full portfolio upload feature available, we'll send a note to everybody. It's a great question. All right, great. Well, also, if you don't mind shooting us a note to support@ivolatility.com, let us know what you thought of today's webinar. We're looking for feedback, always looking, for feedback from the users on what they enjoyed or what you want to know more of. What we can do next Tuesday, if there's the demand for it, we could look at the other strategies. So today we use Dish. Next Tuesday we could use a different stock, and what we could do is we could look at the strategies we didn't have time for today, which would be like counter spread, bull vertical spread, bull diagonal spread. One of my favorites, conversions as well, and collars. So we could do, typically when we do real-time spread scanner, we break it up into 3 different Tuesdays, just because it's a beefy kind of muscular topic. But shoot us a note, let us know if you enjoyed this and if you found it valuable. And then, next Tuesday we could do kind of part 2, and we could cover, 4 or 5 more strategies, and we could find a stock to use as our example for that. In the meantime, we're coming up to the hour here. I know everybody probably has a busy Tuesday ahead. Thank you guys for joining. This has been Jonathan at iVolatility. Until next time, happy trading. Thank you, everyone. Yep. Thank you. Yeah. Thank you for the kind words, Lucia. Appreciate it.